Now in this lecture, very short lecture, we will actually understand how pension is taxable, and second thing, how we will compute the problems, the taxable income as pension. So are you ready? Let's start. Hey, first thing, what is pension? Pension is something which you get after retirement, and it is not a lump sum amount which you will be getting. Pension is what you will get monthly. That is what the intention. So your monthly expenditure should be met. For that purpose, the employer gives you pension. Now there are various ways in which pension can be given. Either the employer can directly pay. This is the least preferred option. Or what happens is, employer employee contribute to certain funds, and after retirement from that fund employee gets the pension. So this will also happen, right? Now, okay, how the employee gets pension is not our discussion. Our discussion is how it should be taxed. Now, first question. Hey, monthly pension. Monthly when you receive pension, it is fully taxable. Monthly pension is fully taxable. Now we can also use the word uncommuted pension. So monthly pension, uncommuted pension is fully taxable. Sir, to government employee? Yes, even to government employees it is fully taxable. So monthly pension, uncommuted pension is taxable to all employees irrespective of whether they are government or non-government. To everybody who receives monthly pension, it is fully taxable. Now there is something called as commuted pension also. Commuted means lump sum pension. Now lump sum pension, commuted pension. Lump sum pension, commuted pension, both are one and the same. Okay, just to make you remember, I am repeating. Lump sum pension, commuted pension. Okay. Now to government employees, this lump sum pension is fully exempt. So commuted pension to government employees is fully exempt. नहीं लगेगा रे बाबा, टैक्स नहीं लगेगा. To government employees, commuted pension is fully exempt. Okay. But what about non-government employees? For non-government employees, they asked a simple question. Is the employee receiving gratuity? If suppose employee is receiving gratuity, then what they had said, that will give less exemption. If the employee is not receiving any gratuity, then ayyo papam, he is not getting more benefits. So we'll give some extra benefit, extra exemption. That's what the purpose is. Suppose example, the employee is not receiving any gratuity. So he is getting only commuted pension now. Then what happens is, exemption is given. How much? 1/2 of full value of commuted pension. 1/2 of full value of commuted pension. Okay. So how we should calculate tax? We'll write what is the commuted pension received, the amount received, minus 1/2 into full value of commuted pension. Simple. And we'll get taxable commuted pension. That's it. Suppose you are receiving gratuity. If you are receiving gratuity, then only 1/3 of commuted pension. Oh sorry, wrong answer. 1/3 of full value of commuted pension is exempt. Now why I said wrong and then corrected? Please understand, because we may do mistakes. Generally what happens, how students do mistake, I'll tell you. Then I'll teach you the correct one. Okay. Suppose they gave in the question that the employee got some commuted pension of 1 lakh rupees, and in that 1 lakh rupees he is not receiving any gratuity. So if he is not receiving gratuity, so we'll simply say, hey, 1 lakh, Then not receiving gratuity, right? 1 by 2 of 1 lakh is fully exempt. So 50,000 exempt. So 1 lakh minus 50,000, 50,000 will be taxable balance. This is how many people do. But when you receive 1 lakh, is it 50% of pension is commuted, or 100% of pension is commuted, or 25% pension is commuted? Many students ignore this, and that's where they do mistake. Okay, so whatever you received into 1 by 2 is wrong treatment. So what is right treatment? Suppose you received 1 lakh and 25% is commuted. That means this 1 lakh represents 25%. So when I say full value of commuted pension, what does this mean? I am asking about 100% if the pension is commuted, how much you would have received. So 1 lakh into 100, and how much you receive? 25%, correct? So divided by 25. So it will come to 4 lakhs rupees. So whatever you received is quite common, into 100 is quite common, and what is the percentage commutation you received, that you put in denominator, and that you will get full value of pension. Now 4 lakhs is full value of commuted pension. 4 lakh into 1 by 2, 4 lakh into 1 by 3 is exempt. 4 lakh into 1 by 2 when? If you are not receiving gratuity. 4 lakh into 1 by 3 when? If you are receiving gratuity, will be exempt. Okay, this way you should think actually. If you don't think this way, then you will do mistake. Suppose in the question they gave, you received 3 lakhs rupees as commuted pension, and it is 75% of the pension is commuted. Now what will happen? So 3 lakhs rupees into 100, how much percentage we received? 75%, right? Divided by 75. So 4 lakhs is the full value, right? 4 lakhs is full value. Now how much exemption you will get? 4 lakhs into 1 by 2 in case you are receiving gratuity, not receiving gratuity. So how much? 4 lakhs into 1 by 2, 2 lakhs you will get exemption. Okay, so what is the amount received? 3 lakhs minus 2 lakhs exemption, 1 lakh is taxable. This way you should understand. Okay, suppose you are receiving gratuity, then 4 lakhs into 1 by 3, how much it will come to? Something around 4 lakhs into 1 by 3. Very difficult thing. 4 lakhs into 1 by 3. So we'll divide it by 3, and whatever comes, right, it will come to around 1,33,333.33. Really challenging for me. So this way exemption will be calculated. Now you received 3 lakhs, right? From 3 lakhs, 1,33,333.33 you deduct, balance is taxable. Right? You want more example? You see it's given 60% commuted, you received 60,000. Then simple. 100% how much? It is 1 lakh. Right? That you can see on your screen. Chalo, for you again I am repeating everything, and we'll straightforward go to the problems. Hey, I am simply talking about commuted pension, lump sum pension. Simply remember, if it is government employee, fully exempt. If it is non-government employee, categorized. 2, are they receiving gratuity? If they are receiving gratuity, then only 1 by 3rd of full value. This is very important word. 1 by 3rd into full value of commuted pension. And if you are not receiving gratuity, 1 by 2 of full value of commuted pension. So in the questions they give 60% commuted, you received this much, 70% commuted, you received this much, but 100% how much? That is full value. Into that 1 by 2, 1 by 3 you do, you will get the exemption amount. Then what will you do? Your receipt amount minus exemption amount, balance is taxable amount. This way you should solve the problems. Okay, now Monthly pension, uncommuted pension is always taxable whether you are government employee, non-government employee, doesn't make any difference. Now I'll tell you one critical thing. Hey, what happens is, suppose 75% pension is commuted once they give in the question. It means 75% pension you received in lump sum. So monthly whatever you were receiving, out of that 75% you received in lump sum. So when you received in lump sum, will you again get monthly? No, right? So only 25% balance you will receive on a monthly basis. Suppose your pension was 10,000 and 75% is commuted. So what will happen? That commuted taxation we discussed. But after commutation, your monthly salary will not be, monthly pension will not be 10,000. It would be 10,000 into 25%. That is 2,500 will be taxable. So 75% gone. You actually sacrificed for some lump sum amount. That you should keep in mind. Okay. This way we understood everything. Now let's solve the problems. Hey, now we have Amit's question, right? Mr. Amit has retired from his job on 31st March 2022. Okay. 31st March 2022, Amit retired. Okay. That means not in the current previous year, but he retired on 31st March 2022 means last previous year he retired. Because our previous year starts from 1st April 2022 till 31st March 2023, right? So in the current previous year he will only get pension. From 1st April 2022 he was entitled to a pension of rupees 3,000 per month. So pension is monthly 3,000. Now tell me, this monthly pension is exempt, right? No. Then what? Fully taxable. Okay, keep in mind 3,000 per month is fully taxable. When you receive uncommuted monthly pension, it is fully taxable. Okay, on 1st August 2022, that means April no change, month May no change, June no change, July no change, April, May, June, July no change. But on 1st August he got 80% of his pension commuted. Now what happens? He is getting 3,000 per month as pension. This is 100% monthly pension. Now when he took 80% in lump sum, will he get again 3,000 from August, September, October, November? No. He will only get the balance. 80% he took in lump sum, right? Balance 20%. So 3,000 into 20%, how much? 600, correct? 600 he will receive in monthly mode from August, September, October, November. Every month from August till March, only 600 he will get per month as pension. Okay. So April, May, June, July, 3,000 per month pension. August, September, October, November, December, January, February, March, only 600 per month pension monthly. Okay, and this is fully taxable. Of his pension commuted and received rupees 1,20,000, right? Compute taxable pension if he is. Now 1,20,000 he received for 80%. Then what is full value of commuted pension? देखो, full value of commuted pension is equal to pension received 1,20,000 into 100 divided by what is that? 80%. Okay. So when you do 1,50,000 is full value of commuted pension. This you should keep in mind. Okay. Now let's see how to calculate, what to calculate. There are many cases actually. A, B, C, D, E, they give so many, right? So we have to do all that. Chalo, no problem. First one, case A, he is a government employee. Case B, he is a non-government employee not covered by gratuity. Okay. And not receiving gratuity. This is right word. Hey, You are actually covered by Gratuity Act or not covered by Gratuity Act doesn't make a difference. Okay, the only thing makes difference is what are you receiving gratuity or not receiving gratuity. That makes difference. You are covered by Gratuity Act or doesn't not covered by Gratuity Act doesn't make difference. Come to the C case. Case C, non-government employee uh, receiving gratuity but not covered by the payment of Gratuity Act. Is this important? Not important, right? But not covered by, irrelevant for our exams or our understanding when it comes to pension. Okay, shall we solve the problem? Hmm. All we can put in one table, correct? So write down computation of taxable pension. Computation of taxable pension of Mr. Amit. For the assessment year 23-24. For the assessment year 23-24. Now we have three cases, correct? So we'll write around 3 into 2, 6 columns plus particulars column. 7 columns we'll draw. Particulars, case A, in that details amount. Case B, details amount. Case C, again details and amount. Okay. Now let us draw this table very well and then we'll solve the problems. Are you ready? Yeah. So first thing, monthly pension is taxable to everybody, right? So shall we write that? Are you ready? Yeah. So write down uncommuted pension. In particulars we'll write uncommuted pension. In particulars we'll write uncommuted pension. You can even write monthly pension, nothing wrong. Okay. Now देखो 1st April to July 31st there is a separate story. 1st August to 31st March 2023 is a separate story. So we have to put it into two parts. So 1st April 2022 to 31st July, that is 31st 7 2022, 4 months, right? So 3000 was the pension, so 3000 into 4, 12,000 each case, correct? Case A 12,000, case B 12,000, case C 12,000. We'll put in details so that we can do total properly. Okay. Write down everybody. Very good. Now from 1st August 2022 to 31st March 2023. To 31st March 2023. Now you don't know how much is your fixed amount, so that we'll write 3000 into 20% into 8. Because how we got 600 you should remember, right? So that's why I am telling, that's it, nothing more than that. 3000 into 20%, because 20% you will be receiving monthly now. 3000 into 20% into 8. So you will get 4800. Am I right? Yeah, right. So that also you write in details. That also you write in details. Now let us do the total. You have 12,000 as the pension for the 4 months and then 4,800 for the 8 months. Total is 16,800 for the whole year. So case A, case B, case C, all cases 16,800 we'll write. Here there is no change in all the three cases, same monthly pension ना, क्या करेंगे? 16,800. 16,800. 16,800. Done. Now. So now write down commuted pension. Uncommuted monthly over, right? Now commuted pension. Now commuted pension. Now commuted pension, how much we received? 1,20,000, correct? Let us put it in details. 1,20,000 in all the three cases it is same. So write down that 1,20,000, 1,20,000, 1,20,000. Now from this some exempted amount is there that should be deducted. So write down fully exempt. Okay. Please remember case A, government employee, right? So for government employee it is fully exempt, right? So write down less exemption. As of now simply write one word, less exemption. Here we will not write anything in this. Okay, less exemption. Okay. Now we'll write one more line. Case A we will write. Case A, fully exempted under section 10, subsection 10A, clause 1. Section 10, subsection 10, clause 1. Okay. Now when it is fully exempt, so 1,20,000 is the commuted pension, fully exempt. So whatever you received, that is fully exempt. So 1,20,000 we will write in the fully exempted. Case A, fully exempted under section 10, 10A, right? 1,20,000 we will write. In the outer column, that is amount column, what we will write? Array 1,20,000 minus 1,20,000 will be nil only, right? That we will write. So first case is over. Now nothing to do with first case. Now come to the case 2. Case B we will write, correct? Now write down case B. This is also exempt. Exempted under section 10, subsection 10A, 10 subsection 10A, clause 2. 10 subsection 10A, clause 2. Section 10 subsection 10A, clause 2. Now please remember what is this case B that we will see. Government employee. No, non-government employee. Yes. And is he receiving gratuity? Not receiving gratuity. So if non-government employee is not receiving gratuity, it is clause 2. Okay? Correct. So not receiving gratuity, how much is exempt? 1/2, correct? So that we have to give exemption. Chalo, write down. We received how much? 1,20,000. So we'll write in more detail so that you will understand tomorrow. Okay? Right. So case B, exempted under section 10 subsection 10A clause 2, that we wrote, right? And 1/2 into 1/2 is exempt, correct? Into 1,20,000 into 100/80. 1/2 into 1,20,000 into 100/80. So 1,20,000 represents 80%. 100% how much? So it will be 1,50,000. So 1,50,000 into 1/2, 75,000. That we have to write in case B details. Okay, write down 75,000. Okay. Now in details you see case B, 1,20,000 is commuted pension. From that 75,000 exemption is there. When you deduct that, how much it will come to? 1,20,000 minus 75,000, right? 45,000 should be there, correct. Write down 45,000 in the amount column, case B, amount column 45,000. So 45,000 is taxable. 75 is exempt, 45 is taxable. Okay. Now let's write down case C. Case C. Exempted under section 10, subsection 10A, clause 2. Exempted under section 10, subsection 10A, clause 2. Now anyhow full value of pension is 1,50,000, we know, right? So directly we will write 1 by 3 into 1,50,000. 1 by 3 into 1,50,000. How much it will come to? 50,000 only, na? Right. In case C details, we will write 50,000. Now tell me, if 1,20,000 is the commuted pension, 50,000 is exempt, how much is taxable? 70,000 is taxable. Okay, write down that. Do you feel with this it is over? We only know that how much commuted value is taxable and how much monthly pension is taxable. But total taxable pension, do we know? We have to do that. Total we have to do, right? So let us do that part also. Last portion, taxable pension. Taxable pension. Now, government employee commuted is fully exempt, so only monthly taxable. So 16,800. Taxable pension 16,800. Taxable pension 16,800. And in case B, 45,000 commuted is taxable and monthly 16,800. When you do the total, 51,800 I feel it should come. Bhai, 51 kaisa re bhai? 45,000 plus 16,800, right? So it is not 51 but 61,800. I am right now. So how much? 61,800. Done. Now case C you see. Case C 50,000 is taxable and 16. Case C 50,000 is exempt. 1,20,000 minus 50 is exempt. So 70 is taxable. Okay. 70 plus 16,800. 70 is commuted pension taxable and 16,800 is monthly pension taxable. So total is 70 plus 16 is 86,800 I feel. That is taxable pension. I can use total taxable pension also, nothing wrong if I use. But anyhow, whatever they gave, we are using, that's it. Okay, clear to all of you? Like this, we have to solve the problems in pension. Are you clear? Very good. Nothing more than this. They will not give any other case. Suppose if they give family pension, don't worry, under other sources chapter we will discuss that, how to solve problems on that. But if it is employee pension, it should be taxed like this only. Okay, very good.